Will the housing market cool down? This is a topic everyone is thinking about right now. You read it in the news, you see YouTubers talking about the housing market. Will it normalize? Well, this article I'm going to show you today is really interesting because it talks about signs of slowdowns in the housing market across the United States. This article is from Yahoo Finance, and it talks about a husband and wife in San Francisco, and they locate a property to buy, and they're about to put an offer in that's above asking price because that's what you have to do in this market with all the buyers. And as soon as they were going to do that, they noticed on their phone price decreases on a few other listings that they were interested in. This led the couple to think, okay, maybe the housing market might be cooling down a little bit, so they're gonna wait on the sidelines to see what happens. The article says that's exactly what the Federal Reserve policymakers hope to see as they raise interest rates to bring down a 40-year high inflation. Okay, one leg of their effort is to take the heat out of the housing market, where low borrowing costs introduced to cushion the economy from the pandemic helped fuel a 35% rise in home prices over the past 2 years. So with the super crazy low interest rates, getting a mortgage financing was cheaper than ever, and this led to part of the reason why the housing market has gone up and appreciated so much in the last 2 years. While house prices are not part of the inflation indexes the Fed tracks, they look at rents that are influential to inflation, okay? Because as the prices of homes increase, the price of renting increases as well, right? It corresponds, it goes together. So this is interesting. The article talks about the 10-year Treasury note yield, right? A benchmark for mortgage rates, it says, has risen on expectations of the swift Fed rate hikes, right? So the average 30-year fixed home loan rate is now 5.37%, up more than 2 percentage points since the year began, according to the MBA, the Mortgage Bankers Association. So this is a really cool just example they give us. So buyers of a typical existing home, which went for $375,000 in March, they'll pay $440 more each month than they would have if they bought the home in December with the lower interest rates for a mortgage, right? So this is if they put 20% down and borrow the rest at a fixed rate for a 30-year term. That's insane. And you could see $440 more each month is a lot for the average American. In a year, that's $5,280 extra just because the 2 percentage point increase. This chart right here shows you the monthly payment on a median home at average mortgage rate. And you could see the drastic difference, right? From a lower interest rates to the higher ones we're experiencing now. And of course, they've been way higher than this, but just look at this, okay? In 2006, it was around $1,200 a month, right? A month. That was the average, okay? And then 2012, rates were low, home prices were low. It was around $600 a month. Now, the crazy part is just last year, the average payment was around $1,200 per month. In 2022, we're up to like $1,700 a month, the average payment for a mortgage, okay? And the bulk of the rise shown in 2022 is due to mortgage rates, not the price of the home itself. So this increase right here on this chart, this isn't due to just prices being a lot higher. This just sudden jump we're experiencing is due to interest rates. And this is actually by the National Association of Realtors and the Mortgage Bankers Association. So it's wild how much more you pay monthly with higher interest rates on a mortgage. The article goes on to say the last time mortgage rates rose this fast was the spring of 1994. Total home sales fell 20% as the Fed lifted rates and home price growth slowed, right? So economists now, they're saying, are predicting a similar sales drop and slowing price growth too. They're saying roughly 5% annual by the end of this year. So that's not saying home prices are going to stop going up higher and higher, but it's not going to be as drastic as we've been seeing for the last 2 years. But this is the big but. But an unprecedented collection of factors, including record low housing stock, unusually high household savings, part of that's due to inflation, right? We're printing all this money, an extremely tight job market, increased worker mobility, more people working remote due to COVID and all that sort of stuff, are creating cross currents that could blow that forecast off course. So it's saying, well, that 5% annual rate might be 10%. It could be higher. So now across the US, we are starting to see price reductions right here. List price drops, right? So the price you list your home for, say $100,000, say you sell it for $95,000. I don't know where you can get a home that cheap. It's that's impossible. But say that decrease from list to sales price, they're saying that now accounting for 13% of homes for sale in the 4 weeks from mid-March to mid-April. So Redfin says that's up from 9% a year earlier, right? That list price drop, the list price to the actual sales price, it's up 9%. So prices are dropping. People aren't just getting crazy over asking. In some markets, it's still happening, of course, but we're starting to see a slowdown, a more normal market. But mortgage applications remain above pre-COVID levels, and house prices hit a record as homes were snatched up typically within 17 days of listing. That's fast. Take a look at this chart. The fact that percentage points on loans, on 30-year fixed loans, have gone from 3% to over 5% just in this year, that hasn't happened, this chart says, since the mid-1990s. Okay, look at this. You can see right here, we have this spike in 2022 with this 2 percentage point change, and that's because the Federal Reserve really wants to stop inflation. This scientist here from MIT, just say you're from MIT and you're a scientist, sounds smart. Prices do not appear to reflect a bubble. This is what this individual says. I wouldn't even necessarily call it a cooling. I'd call it a flattening of rates of appreciation, but not this year because there are still relatively low interest rates. Noting that mortgage rates have historically been much higher than even 5%, what we're at now. So with that mobility I was talking about with COVID, people being able to work remote, this happened to Rob and his husband. They were living in Austin, Texas, right? It says Austin home prices, right, were around $415,000. Now they're $624,000, the median price. Well, they really could qualify for about $300,000 maximum. Well, since, job mobility, they actually quit their job, got hired with a different job with a 35% salary increase. They founded a home in New York. In Kingston, New York, the median home price there is $280,000. So this says right here, Redfin, if people respond to higher housing costs by moving to more affordable places, that could lead to more home sales. So there's so many factors here, guys. It's not so cut and dry. It's not so simple. And if you're enjoying this video, make sure to give this video a thumbs up and make sure to like and subscribe for weekly videos on the housing market. Look at this chart showing record low inventory, okay? On the left, you see 4 million, 3 million, 2 million. It's talking about the number of homes on market, okay? Bottom the years. This is by the National Association of Realtors. Here we are in 2022. We have seen a little uptick last month with more inventory coming on the market, but still, guys, we are a long way off. Homes still are at a record low of inventory, and classic supply and demand. If we don't get more inventory on the market, home prices, are going to continue to rise. Maybe not as much as they have been because of the rising interest rates by the Fed to curb inflation. And now it's going to be, more expensive to buy the same home. But still, with record low inventory, I think home prices are still going to go up a little. Now, there's another interesting component that this article talks about regarding housing being at record lows, okay? It talks about millennials and it talks about boomers and institutional investors buying homes and second home buyers. This is fascinating, guys. Record low inventory over the past couple of years also means there's plenty of pent-up demand. Well, that's obvious, particularly among millennials ready to set up a home whose shares of purchases has been growing. But look at this, they're bumping up against boomers discouraged from downsizing by rising cost of alternative housing, staying put and keeping the larger homes desired by younger people off the market, and too few new homes are being built. So you have these millennials ready to, they're getting married, they're having kids, they want to buy a home. You have boomers living in these larger homes that don't need all this space and would typically be downsizing, right? Because their kids are out of the house. Now they're starting to have grandkids. They don't need all this space, right? But with housing costs being so high, if they sell their primary residence and even downsize, where are they going to go? Everything's so expensive, they would rather stay put. Also, how about all the homeowners who have sub 5% interest rate loans, home loans? I mean, why would they want to get into a mortgage with a maybe 5 to 6% interest rate? I mean, that's almost double than what they're at. So that's keeping, in my opinion, a lot of homes from coming on the market, because if you sell, where are you going to go? And if you have a really great interest rate, do you want to get into a higher one when you don't have to? Also, realtor groups show that the share of all cash sales were the largest in nearly 8 years in March. The supply is being gobbled up by institutional investors or second home buyers. I mean, I did a video on this. With inflation, real estate's a great hard asset to have, right? There's intrinsic worth and value, just like precious metals, silver or gold. So these institutional investors are going across the nation buying up single-family detached homes, leading to just a lower supply of inventory for just, normal buyers who want to buy a home. Second-time home buyers as well are swooping up homes because real estate is just a good investment during inflationary times like we're in now. I think this article makes a really good point that I think we're going to start seeing more a normal market, right? I mean, say if home prices even increased 5% this year, 8% this year, that's half of 15% where they've been at, nationwide in the last 2 years. National average for housing increase per year should be like 3 to 5%, okay? So that's more a cooler, normal market, which the Federal Reserve is trying to steer us toward. I think there's going to be an end in sight to this housing madness. You're going to want to make sure that you subscribe to stay up to date every week with new videos on the housing market. Thank you for watching. If you need a great realtor in your area, you could look below and I'd be happy to refer you. Thank you.